Hi, my name is Emily Boutros. I work for Tandem Launch Technologies, which is what I like to say a startup generator. So we basically create startups that is located in Montreal. Raising financing is an art. First of all, the first thing you have to know that it's very, very tough, but it's also a lot of fun. There are different steps that you have to follow, and I'm going to try to explain today what are the different steps to have a successful fundraising and start your own technology company. A lot of people wonder, should I go with the angels, should I go with VCs? There are pros and cons using either of those groups. The valuation will dictate whether you can go with VCs. VCs usually do Series A, so your valuation really has to be between $4 and $6 million. If it's lower than $4 million, you better go with angels. If you want less operational controls, angels are way more operationally involved than VCs. But it also depends on the valuation. The first step is to prepare the pitch. Preparing the pitch is telling a story. Everybody will tell you, talk about the market, the competition, the team. I think it's great, but it's a little bit too academic. If you want the investor to be captivated, you have to make sure you tell a story. Personal stories are the best ones. So at the same time that you're talking about the competition, the market, and the team, tell them how you got your idea. What brought you to think that this technology is going to change the whole way music or internet is working today, and why you think that you are the best lead and the best company to make it happen? When you prepare a pitch, I would say not more than 8 to 10 slides, because if you put too much information, you're losing the attention of the potential investor. Furthermore, make sure that you put a lot of images and big names like Samsung's or Sony's, or huge numbers like 100 millions, huge market, so that you can actually sell the vision. But it's called the vision in finance, but in real life, it's more a dream than a vision. And I think the passion is what people are going to read and buy and get into when you tell your story in front of them. And that's what will make them like you, your company, and your product. So after you finish your pitch, whether it's in front of angels or in VCs, make sure you ask them questions or feedback about what you just presented. The feedback is a very important tool that I think is underrated on the market right now, because it gives you opportunities to improve your pitch for the next time. And also, if you're really good at reading situations, it can avoid you to lose time with people that are actually not that interested in your project. The due diligence will start. I don't suggest to start the negotiation up front. First, you have to create a hype and competition. So you ask everybody around the table if they're interested, you create the hype, you continue giving good news, and once you know that there is interest, then you can start negotiating your terms. Most of the time though, VCs and angels will tell you, yes, we're interested, and you just go back home and you're just waiting for them to call. It's gonna take a while, so you have to find ways to reconnect with them. There are different ways to reconnect with them. I'm thinking that sending them an email a week after you met them is a good idea, with news, with new team members, with another new client that you might have. So another reason to meet with them again. Don't go to only see one VC. You need to meet a lot of them. And then when you have interest, you actually have to identify a lead with the VCs too. The lead is usually a natural thing that comes during the raising financing activity. So basically, you will see one of the VC that comes to you that starts negotiating the terms and asking more questions to start the due diligence. And I think this is when you can tell him, listen, do you want to be my lead? And then you can advise the other VCs that you actually haven't identified your lead. What I suggest to everybody that's listening to this video is that they read the book Venture Deals by Brad Feld. It's really good to understand the basics of finance before you start dealing with the VCs. It will increase your credibility, and you don't want to look like a fool in front of your investors. That's it. Then when you have raised your money, the big fun starts, and you actually have to build your startup. Usually the money will last between 12 and 18 months, so you might have to do it again and hopefully get better at it. Good luck.